Hello traders, it's been a while. Today I caught a 1:6 risk reward trade and I'm so happy about that. I don't know about you, but I'm happy, and I've been losing recently. I've been losing so much recently, and today I just used liquidity concepts I've been learning lately, and I was able to catch a 1:6 risk reward trade. And I'm going to break down how I took the trade in this video, and I hope you learn something and you'll be able to catch similar trades in your own trading. Like this video, subscribe to the channel, and let's get straight into the video. This is the trade I took today, this afternoon, and the trade is already 1:5R going, and I've taken partial from here and the rest is still running, but I'll close it very soon at 1:5R. And I'm going to break down how I took this trade. And I only trade Euro USD, as you guys already know. And let's look at the higher time frame. For me, my higher time frame is 15 minutes because I am a day trader, or more like a scalper kind of trading style. And you can see that the market is been ranging. If you come to the higher time frame like this, you see that the market has been ranging since last week. We are ranging from this high and this low here. So you see that we move up. Let me use this tool. You see that we move here, and we tried coming down, and we tried going up, and we are here again. So you can see that the market is actually ranging. There is no clear path, and I trade liquidity. And so when I woke up this morning, as you already know, if market takes an external liquidity like this, let's say market is ranging like this, you know that the next target is to take out this high here. And once we take that liquidity, you know that the next liquidity target it will take is to take all these internal liquidities and target this external liquidity here, and then maybe it can continue like that. So it will take liquidity, come down, take liquidity, and it will continue like that. So when I woke up this morning, today being Monday, and I realized the market has already taken out liquidity from this swing low. The market has already swept liquidity. The market was already buying up. So if market is buying up and we have taken external liquidity, it means that we are going to target the next external liquidity, but the internal liquidities are going to be swept first. And when you look at it from here, you will see that the next internal liquidity is this guy, this relative equal highs. And if you have watched my liquidity videos, you know that I trade trendline liquidities and equal lows or equal highs liquidities. So you can see that this equal highs here, I knew this was the next target, the next liquidity target for the market to be swept. And when market took out this liquidity, you see that before market went up, market gave a trend line liquidity here. Okay, this trend line liquidity. So in my mind, I was thinking, if market take out this internal equal highs liquidity, the market needs to take another liquidity before it can move up. So market needed to come down, take this liquidity here, and then before we can continue buying to the upside here. So what I did was, sorry guys, sorry. I trade mostly on the 1 minute and the 3 minute time frame. So I went to the 5 minute time frame, and I can see that there's another internal trend line here. You can see. Let me zoom it. You can see there's another internal trend line here. 1, 2. This is the third bounce, and you see market actually reacted from the trend line here, and it went up. And if you trade trend line liquidity, you know that as market is doing like this, trend line liquidity, as market is doing like this, higher high like this, and trend line traders, first touch, second touch, third touch, sorry guys, And as you can see, the trend line traders, first bounce, second bounce, third bounce, they are already buying here. So once they have started buying here, you as a liquidity trader, you want to look for an opportunity to sell against them. So you wait for market to react from here to induce trend line traders that yes, we are going to buy, we are going to the upside, and they will start buying. Once they start buying, they will push price a bit above, and you wait for a manipulation around here. Then you sell the market to the downside. You sell against their buyers. That's how I trade trend lines liquidity, and it's working. So you can see that over here, this was the third bounce. When I go to the 3-minute time frame, you will see it clearly. You see the market bounced from there, and it went up, and it came again and bounced out, which means that people are actually buying here as trend line traders. And we came down and we broke that that trend line. Now, when we broke this trend line below here, those who trade breakouts have entered here, and their stop losses are here, and they are saying that, oh, trend line has been broken, we are trading breakout, and they are entering, and their stop losses are above here. And those who already bought, their stop losses are here, and their stop losses have been kicked out. And the breakout trader stop losses, don't forget that there are also orders the market needs to sweep. Okay, so the breakout trader stop losses needs to be swept. So what I did was I just waited. I didn't rush. I just marked out this high, and then I pulled out my tool here, and I waited. I wanted market to come and sweep this high created. Okay, this high created, and when the high got taken, if you go to the lower time frame like this, you see that market wicked them out, then closed back inside. Then immediately I took my sell opportunity, and when I took my sell, automatically my stop loss will just be a bit above this wick because of these spaces in between here, these imbalances or fair value gaps, in case maybe price wants to mitigate them. And where did I target? I always target what? Liquidity levels. I always target liquidity levels like this. Like this. Our targeted trend line liquidity, which is 1:7 trade here. You know, the trend line started from here, 1, 2, 3. You forget this trend line, okay? Look at this trend line, 1, 2, 3. And so I targeted here, but I ended up closing around 1:6 arrow thereabout when it got to this point, because I've already gotten enough. And aside using the trend line liquidity, there's another form of liquidity trading that you can use to cash trades like this. Let's say market is bearish, okay? Market is doing lower lows, lower highs, lower lows, lower highs, and you want to join the trend. What you need to do is you wait for the market to create a lower low, and it will come out and sweep a swing high as if it's a change of character. So what you do is, when market gets to this point here, when market gets here, it will induce traders that order block. You see, order block traders will put SMC, ICT, they will put their order block, they will mark their order block zone here, and they want to sell from here. So what you do is you wait for the market to sweep out that high. Once that high is swept, those who kept their pending orders to sell the market are out, and those who trade change of character, they have already marked this as what? As a change of character, and they are waiting for an order block here to take place, or a fair value gap or anything to take place. So what you need to do is you wait, you let price sweep these sellers out, then you enter, then automatically price will come and sweep all the buyers here who are buying from the order block, and you take it down. So if you look at this scenario that I am just illustrating here, you will see that from here, look at it here, see that from here we started selling low, you see, and we came and swept it out. You see, when we swept this, that was liquidity, and we sold, and we started again selling, and we came and then took that same high out. Okay, this high, we took it out. This is what I'm talking about. So even if you do not even use trendline liquidity, you could still use the scenario I just illustrated right now to cash this kind of trades. You see, we came and swept this high out, and then what did we do? We sold to the downside. So this is, I don't know if this video is long already, but I just hope you understand what I'm trying to explain in these charts, and I hope you can incorporate it into your trading and you improve your win rates and I will definitely see you at the top. Please subscribe to this channel and peace out.